Hi, thank you very much, Divya, for your quick update. And it is, ladies and gentlemen, it is once again a great day today to see you all. Just want to be sure that you are able to hear me. So, any one of you or a few of you can help me with the chat that I'm crystal clear to all of you. You're also able to see me. Wonderful. Thank you, Balasubramanian, Usha, Deepthi. Yes. Well, so with this, let's quickly take a look at what we have to do. I see a couple of people familiar to me. Usha has been there for quite few webinars. Mr. Sornamani, morning to you. Yes, so quite a few people. That's Sri Sailam, morning to you too, and then few others. So we'll get to know as we go forward. Let's talk about what our business is going to be today. So we have a couple of taxation and payroll updates, probably about 5 items. Now, when I talk about taxation and payroll updates, they are predominantly going to be with respect to payroll, right? So something which has to do with HR people or something which has to do with payroll people. Then there is also labor law updates that we have. The labor laws have been pending for quite some time, and let's see what updates have come up recently. And then, of course, a majority of the time we will also spend on answering questions, taking questions, sharing what we think, our perspectives and analysis of what we have to do. So before we start off, I just want to make it extremely relevant to the audience. So, my colleague Divya is going to, run a poll. May I request all of you to respond so that I can, tailor all of these items to your specific company size or probably to your industry. Now, Divya, can we have the first poll, please? Yeah, wonderful. So let's take about 40-50 seconds. I request all of you to answer the poll so that we can, I know where I have to give more importance and where I have to give less importance. Wonderful. Okay. So I'm seeing about 58% of participants have already responded. Just about 20-30 seconds more. Majority belong to human resources. A few of them belong to finance. We have a couple business owners. Okay. Majority of are between 100 to 100 to 500 employee size. That's a good mix. So what happens is, when we have a good mix, healthy mix of employer sizes, the discussion is a lot more fruitful. That's good. We have a couple above 500. I'll try to, touch upon some of the items which are important for you guys as well. And yeah, majority are with IT. Yes, fantastic. Okay, so I believe all of us have completed, most of us at least. Yes. So at least I get the gist, right? Majority of you are HR guys. Majority of you are between 1 to 500, and then ITs or even others. So others. I see that there are 42% from other sectors. So just trying to understand what sector would that be. Can you please put it on chat so that I take specific examples if there is something that I'm missing out. Just use the chat box and see. You can see the results. I'm publishing them now. So human resources majority 1 to 500 majority, and after ITs the other majority is other sector. Any information there will help. Yes, I'm getting few answers. real estate, healthcare. Okay, great, wonderful. Anybody else? I mean, are there predominantly blue collar sectors, which is something like coal or mining, anything of that sort, or probably retail, anything of that sort? Nobody there. Retail e-commerce. Yes, we have somebody from retail e-commerce. Okay, so let's I'll try to make it as much as relevant as possible for each and every one of you. That is my objective today, and probably what we can do is we can also speak in specific to your sector during the Q&A session. So that's also another opportunity that we have. Okay, so let's quickly run through the new TDS provisions that have come up in the recent budget. I'm sure all of you are following budget, but yet something that affects the business is this one. We all know that there is section 194 IA, which talks about TDS on property. Though it may not affect you as a business person, but probably as an individual. Earlier it was on the sale value. Now they have amended it to either sale value or the stamp duty, whichever is higher. So that's a small change with the TDS provision. There are two more new sections that have been introduced. Section 194R. So this is really something that these small enterprises should take note of. When we are small enterprises, it is not necessary that we always pay in cash to our partners or to our vendors. Sometimes we pay in different ways. So here now there is a TDS on the benefit or perquisite of a business or profession. Earlier, the perquisite section was only relevant to employees. Now they have also included other businesses to be liable for perquisites, and I think that is something which is notable. Though immediately we may not have a significant change, but this changes the whole stuff. I don't know. I mean, let's say for the craziness that is happening nowadays with the income tax department, I take somebody out for dinner. This another business owner out for dinner, should that be a perquisite? I mean, crazy questions like these come up, but I'm sure there will be more clarity that comes as we continue to go. When we talk about 194S, this is TDS on payment of digital virtual assets. So if you are in a sector where you are going to receive payments using digital currencies is not yet come, but it will definitely come. There is already RBI who is working on establishing a digital currency, and once it comes, if I receive a payment via digital currencies, 194S is the section under which TDS will happen. Even for me as a recipient, the payer is going to deduct TDS and pay me. Or if your business pays somebody else, as virtual digital currencies, then even you will have to deduct TDS. That is what 194S means. So these are the new TDS provisions that have come into, which are relevant for businesses. Of course, we'll definitely take questions at the end of the session. Another item, I don't know how many of you follow our YouTube channel. We have a small YouTube channel, Relativity Knowledge Series, where we put up short videos which are useful for HR, finance, or business owners or entrepreneurs. During the budget, we had released a video. I encourage all of you to have a look at it if you haven't. Not that you don't know what happened in the budget, but just that it'll help us understand better. So the government NPS contribution now has been made on par. Earlier, it was the central government who was paying 14%, and the state government employees were only being paid 10%. Now both of them have been equalized to 14%. So those of you, let's say, if you are payroll processors, if you are handling payroll for other government sectors do make a note of this change. The third is introduction of this section 158AB. Now, this is particularly interesting for finance guys or for tax guys, and a few of them are here. So for all of them, 158AB talks about, where an identical question of law is already pending before a jurisdictional high court or Supreme Court. The income tax department is not going to appeal. Now, after it has been notified, we will also know whether we can appeal or not. But right now, it is the income tax department prima facie who's not going to appeal if there is a pending identical question of law. So this is, it has both sides to the coin. I mean, it's both good as well as bad, but in the long term, it will reduce a lot of litigations from the SEC's side. So this is a welcome change in the long term. But in the short term, the impact is going to be there because, let's say, because of our appeal, we are supposed to get a refund. Now, the income tax department is not going to accept that appeal because there is a identical question of law that is pending with another jurisdictional Supreme Court or High Court. So that is going to delay my refund because we have to wait until that case is disposed of. So it's, on the whole of it, it does seem to reduce litigation, but it does come at a certain pain. I can certainly say that. We all know about, Chapter 6A deductions, and then there is Section 80C, there is 80D, which talks about medical insurance paid for self, parents, and dependents. There is also Section 80DD, which talks about disability and the expenses that can be claimed towards disability. So here, the amendment is going to include disability payout on either a lump sum payout or an annuity payout will not be added to the taxable income of the dependent. Of course, the employers don't have any role here, but we've included just to make sure that you are all aware of what this all is. The fifth is, even during the last month, by the way, just to share with all of you, this, update webinar that we are going to run, we have made it as a consistent monthly exchange of ideas, monthly, you can call it monthly get together of people in the HR, in the finance, in the payroll space. So this is going to happen, I think, on the second Wednesday every month. Is that correct? Yes. So on the second Wednesday every month, this webinar is going to happen. Whether you receive, a reminder or not, please put it on your calendar. We'll be so glad to see you and to solicit your participation. During the last month's webinar, we spoke about these COVID expenses. There were a lot of questions because there was, at that point in time, there was only a press release. We did not have clarity about, under what section, what is happening, blah, blah, blah. So now with this, budget, that clarity has come. A new section has been introduced, section 56 of 2 of 10, which talks about COVID-related expenditure. Now, there are, two aspects to it. One, your role as an employer, and then your role as an individual. So I'll try to limit, my explanation to your role as an employer, and all you HR guys and those people who run payroll. This is very important. So just let's give a bit of attention here. So what this section says is, okay, I think I've put it. Yeah. What this section says is any money received from the employer for medical treatment is non-taxable. It could be for self or it could be for family, dependents. Okay? Any money without any limits. Of course, the employer is supposed to make sure that the money that is paid to the employee is, is actually on a reimbursement basis. It is not paid on a ad hoc basis. So you'll have to collect all the bills and everything. Second, any money received from the employer because of the death of their own employee, right? So you are paying um, gratuity, so not gratuity, you are paying a payout, a lump sum, value for somebody as a goodwill for somebody who has died, one of our associates. If that is the case, even that money will be non-taxable in the hands of the employee or the employee's family members. Whoever receives the money, it will be non-taxable in their hands. And again, there is no limit here as well. The third is, of course, this is not related to employer, but just generally I'm sharing money received from others. So as an individual, if I have COVID and I am receiving money from few of my family or few of my friends, and I don't intend to return it back. If that is the case, even that money cannot be added to my taxable income without any limit for medical treatment of self or family members. But if any money is received from others upon the death of the individual because of COVID, then up to 10 lakhs in total, not from each person 10 lakhs, but in total up to 10 lakhs is non-taxable in aggregate. So I think, these are good things that the government has brought in. And the best thing is that though we are talking in March 2022, this is retrospectively applicable from the 1st of April 2020, the time when COVID was at peak and all of those sorts have happened. So, those organizations, the small and the medium ones, if you have supported, in case you have supported your employees, though I know that we don't have a legal obligation to pay their medical expenses, but some organizations have just gone the extra mile to support their employees. If that is the case, then if you collect bills from those employees, that money can be non-taxable in the hands of the employees. So that's something that I wanted to share about COVID-related expenditure. And I think with the introduction of Section 56 of 2 of 10, we get a lot of clarity of how we should proceed forward with respect to COVID reimbursements. I mean, I have seen a few of our clients for whom we do payroll lodgement service, where we act as their tax advisors for payroll related items. They have been struggling because they have a huge employee population, and in the absence of notification, in the absence of an act, it is really very difficult to bring in something which may happen in the future. So with this introduction of this Section 56 of 2, I think we can put a rest to that. Just to remind all of you guys that the chat is always there. So any questions you can always put it on the chat box, or we can also take it during the Q&A session. You can also raise your hand so that we'll go one by one of those people who have raised your hands. Okay, now these were the items related to taxation. Let's talk about the labor law items, right? You would be seeing the news that is promulgating around. From 2019, the central government has been trying to push these 4 labor codes. The code on wages, the code on social security, the industrial relations code, and the OSWAP, the occupational safety and health code. But, because it's not only the center who is responsible, but it is also each of the state who are responsible for bringing, for implementing them in their respective states. Because of this overlap, that there has been a lot of friction, there has been a lot of delays. We saw in 2021, there was, in March, I think one of our senior labor ministry official himself said that, no, we are going ahead, we are implementing it from the 1st of June, but nothing happened. So I believe there are a couple of reasons for it. One, the whole, employer population of India feels that having 50% as the basic plus DA will significantly increase their liability, right? Because when you have higher basic plus DA, automatically your provident fund is increased, your gratuity is increased, all those compliance items which are related to the basic plus DA get affected. And that I think was a lot of friction to a lot of employers. So a lot of companies protested against having it at 50%. See, if you ask me, is it beneficial for the employee? Yes, it is beneficial for the employee. But introducing something at a time like COVID, when the whole industry, across industries, is trying to cope up with the challenges that COVID has brought up, is not the right thing, in my opinion. In purely my personal opinion. So now what they so that was one reason why. The second reason was a lot of resistance was there from the trade unions, because one of the things on the industrial relations code says that until the company has more than 300 employees, there is no need for them to approach the labor office, the labor commissioner, for termination, for shutdown, for retrenchment, for anything related to sending out employees. Okay, so this limit is 300, and what the trade union started saying is that 84%. I think, I'm not sure if it is 74 or 84, but there was a statistics released by the by one of the very large trade unions, which said about 74 or 84. I'm not sure of this number, but it is between 74 or 84. So many employers will be out of that IR ambit because of the 300 employee limit mandate. So there was a lot of resistance from these labor unions because they represent the employees themselves, right? And what if you have 200 employees? I mean, the employer can just do anything. If there are 200 or 250, they really don't need any permission specifically to send anybody out. So that this led to a lot of resistance from the trade unions, and now the labor ministry has proposed to reduce the number of employees for whom the IR code will be applicable from 300 to 100. So when they do that, 94% of employers will come under the IR code. Is it going to make our lives difficult? Yes, it is going to make our lives difficult. Is it only applicable for factories, for manufacturing industries? No, not like that. The industrial relations code is applicable to every employer who has more than, if the revised recommendations are accepted, more than 100 employees, irrespective of you being manufacturing, you being a trader, you being ITES, knowledge-based profession, or somebody like Relativity, who's purely a PSF, professional services firm, outsourcing firm, whatever, right? So 94% will come under the ambit of industrial relations code, and that is a significant jump. Of course, some states have given a blanket exemption in terms of certain labor laws, but I believe all of that will be overturned when the new labor laws come under question. So what we see, point number one, is that the new labor laws will be introduced, but with a sunset period. So the day they are introduced, the ministry is not going to mandate at 50% of basic plus DA. Instead, it will be like, I'm just saying, right? I don't know, but I'm just saying it could be first year, make it 70, second year, bring it down to 60, and the third year, bring it down to 50. The 70, 60, and 50 are our other allowances. So we have the basic plus DA concept reaching to 50% over the next three years. And I believe that seems to be a win-win to everyone. Of course, I also spoke about this IR code threshold reduction from 300 to 100. Though this looks like a recommendation, it is really not a recommendation. This will come through in all probabilities. Yes. With that, let's start taking questions. Before we go there, I just wanted to share some facts with you. We are 13 years and young. I always like to call ourselves young, not old, including all of you. You're also dash years young, not old. 153 clients and counting. Relativity speciality is that we process huge number of transactions in terms of taxation, in terms of payroll, in terms of compliance, in terms of payroll lodgement, about 12 lakh odd transactions per quarter. We have outstanding accuracy rates of 99.5. We serve 16 cities in India, and we have about 4.76 lakh Form 16s issued. So these are relativity's credentials, and should you wish to reach out to us for any of your specific business requirements, happy to speak to you. We work in payroll, taxation, compliance, and accounting, as you all know. And quickly, let's get into the question and answers. So I'm starting with the questions on chat. Yes, so I have a question by Prachi Saxena, who says our company reimbursed bill of employee who took vaccine. Is it taxable? I believe, Prachi, we also spoke about this in length during the last webinar. If you have received a bill for the vaccine, let us say, for example, the cost of the vaccine. For example, the cost of the vaccine is 2,000 rupees. If you have received the bill and you have paid it against the bill, then that money is not going to be taxable in the hands of the employee, but on your books of accounts, you have to show it as a employee welfare expenditure. I hope, Prachi, I'm clear about that. And it could be for the employee, or it could be even for employees' families. In both cases, that is very much possible. So while we are looking at a few other questions, I will request Divya to run another poll just to see if you are interested in reaching out. So Divya, can we have the other poll while I'm actually taking the other questions? So feedback, friends, all of those who are participating in our webinars. I see a few of you are repetitive participants. Thank you very much. Your patronage is really something that keeps us going with these webinars. But at the same time, your feedback is so very important. So please take a minute to answer our feedback, while please also let the questions keep coming. Usha has asked, is there any exemption if an individual spent medical expenses due to COVID? Is there? Okay, that's a good question. That is a good question. So, Usha, we don't have such an exemption, right? There is no changes made to any of those items. Earlier, we had the medical allowance of 15,000, which in 2008 was removed and replaced with standard deduction, which for all practical reasons is only 50,000, which will not even get me a bed in ICU for 3 days. But then it is what it is. There is no exemption if the individual has spent on medical expenses due to COVID. But you strike right at the center of the nail, if I have to say. Okay, I see Mr. Sornamani is there. I already told Usha. Puvili is also here. Happy to take your questions. I'm anyway moving to the next question. Akash, kindly throw some light on new announcements about interest on EPF where amount exceeds 2.5 lakhs. Wonderful. So, Usha, and for the benefit of others, thank you for bringing it up. This is going to be applicable from the 1st of April 2022. This was announced in the last budget, but it is going to be applicable from this financial year. The concept is very simple. If we are paying more than 2.5 lakhs to the employee's provident fund. We're not talking about the employer's contribution. This is only the employee's contribution. The interest earned on the value exceeding 2.5 lakhs will be taxable. For example, if somebody is making a employees share towards a provident fund is 20,000 rupees a month. So in 1 year, they would pay 2.4 lakhs a year. For them, this is not applicable. But let us say if there is somebody who is paying 20,000 rupees a month as a part of their salary deduction, plus they are opting for another 20,000 of voluntary provident fund, right? So that makes 20 plus 20, which is 40. 40 into 12 months is 4,80,000. What the department, what the law says is that you have contributed 4.8 lakhs, but only the interest earned from the first 2.5 lakhs is non-taxable in your hands. The remaining interest that you're going to earn, that is the 2.3 lakhs. On that 2.3 lakhs, it will be taxable. This is what the law says. So, PF is giving about 8.5%. So 8.5% on the excess value of contribution to the provident fund will be taxed, which is approximately 20,000. So this 20,000 will get taxed and appropriate. Let's say if they are on the highest tax bracket of 30%, then they have to pay 20,000 into 30% tax. That is how it is going to work. I hope that's clear. Wonderful. Usha says, mine is a new startup, HR Solutions. All the best for your new endeavor, Usha. Okay. So, this question really brings us, is this the employer's liability? Going back to this 2.5 lakhs. Is this the employer's liability? No, it is not the employer's liability. It is only the liability of the employee to calculate the additional interest and to bear the taxes on that additional interest and discharge the liability. It is the employee's liability. The employer has a different liability, which is of 7.5 lakhs. A Sornamani says, is it inclusive of public provident fund? I don't think so. But, a better person to answer that is Padmajyoti. Padmajyoti, would you take up this question? Is it inclusive of PPF also? Usha, yes. You mean to say for extra 3 lakh minus? Yes, that is right. PJ, go ahead.
Yes, sir. Sir, that will.
Yeah.
So that will be inclusive. It will be inclusive of employees' contribution. We will consider the whole year's contribution of 3 lakhs. From that, if it is more than 2.5 lakhs, whatever the amount we have contributed, for that 50,000, whatever interest that employee is earning, that will be taxable.
Yeah, right. And the other question Mr. Sornamani asked is about inclusive. Is this only for provident fund or public provident fund also? That's the question.
Sir,
I think it is only for EPF. It is
yes,
only
sir.
for
It is only for EPF, sir.
Yes.
Public provident fund and other provident funds will not be included. So in this EPF, both VPF contribution will also included.
Wonderful. Thank you. So I can tell you why it is not inclusive of public provident fund. Because what happens with the employer's provident fund is that money is never taxed in your hands. It directly goes, and you get the tax exemption on it. But Public provident fund is not like that. You get your salary, which is tax paid salary, and that money is only invested in, in all of this. And even public provident fund has limitations. You cannot invest, X amount of money in unlimited amount of money in public provident fund. There are limitations. So I guess the driving factor is people who earn more money shouldn't have an undue advantage. That's where this driving factor is coming. Okay, great. I see a majority of you have given your feedback, but for those who are yet to, would be really helpful if you can provide your feedback. It will just take a couple of seconds, if not more. Okay, I'm looking at if there are any other questions. So are there people on this forum who are also looking at the perquisite taxation of 7.5 lakhs? The perquisite taxation, that is employer's share of provident fund plus employer's contribution to NPS plus employer's contribution to superannuation. All these three put together, if it exceeds 7.5 lakhs, how we should calculate and all of that. If there is somebody, we would love to hear if you have clarity or if you have questions, because we've been breaking our heads from the last few weeks to get to the bottom of it, and I'm happy that we've got to the bottom of it. So happy to share what if there are any questions. Okay, I think this has come from a participant either on YouTube or LinkedIn. Please guide us on the tax exemption of health club memberships paid as a part of CTC reimbursements, mentioned by Praveen. Please guide us on tax exemption of health club memberships paid as a part of CTC reimbursements. So let me try and make sense of your question. Let's say you are providing, the total cost to the company to one of your employees is 25 lakhs, and out of that 25 lakhs, a health club membership costs 2 lakhs. So you are actually not paying the employee 2 lakhs, you are paying the health club directly 2 lakhs, and you are giving the membership access to this individual. So the money is actually not going to the employee at all, and only the remaining 23 lakhs is what you are paying to the employee. The employee is actually going to be only paying tax for the 23 lakhs. The 2 lakhs that you have paid towards the health club membership is, by all nature, it is actually a perquisite, right? So there is no exemption that is available, but rather that money is supposed to be taxed. But let's say, let's say it is not that way. It's still that the employee actually cannot claim any exemption, unfortunately, on health club memberships. I'm sorry. That is still not allowed in India. I just got a chit from my colleague Naveen, which says, please talk about salary restructuring workshop. So we have a salary restructuring workshop that is coming up on the 16th and 17th. 16th Feb and 17th Feb, between 9:30 to 12:30, both days. It is a workshop. The objective of the workshop is for participants to walk back with a revised salary structure for your company. That's the objective of the workshop. It is a paid workshop. It's about 15,000 bucks. I will be running the workshop along with my other colleagues, and we are inviting participants to the workshop. It is a virtual workshop between 9:30 to 12:30 on 16th, and again 9:30 to 12:30 on the 17th. If any of you want more details about the workshop, please leave your email ID and we'll send out the workshop right up. It's only limited to about 15 to 16 participants, because we need to work with each of you guys to make sure that we help you derive a revised salary structure for your company, and this is best for those employers who have less than about 250 employees. It is best for that. You just pay a one flat cost of 14,999, and on the second day of the workshop you actually walk back with a revised salary structure. If you guys want any further information, please feel free to put your email ID on the chat. Okay, excellent session. Thank you, Usha. Del to everyone. Can you please show the calculation as well? I'm sure Del is not your name, but I'm sorry, I didn't get your name. If you can help me, what calculation you want, I'll be happy to. I'll be happy to do that. Okay, one request, could you please conduct a webinar on labor welfare fund benefits to create better awareness for employees? Labor welfare fund. Okay, we can touch on that, but it's fair to say, Usha, that the benefits are not significant, at least for white collars like us. At least for white collars like us, the benefit is not significant. But I can tell you three benefits that people have. One, Arun, would you help me out here? I know that there is a death benefit. Second, I think they pay something for cremation and something else.
Yes, sir.
Arun?
They have certain kind of exemptions in related to the studies of their children, and related to the government facilities to their children. So those kind of benefits are available for the LW of the contributors. So those there are significant lists there.
But then tell me, Arun,
Yeah.
I mean, those numbers, I mean, the value is not great, right? I mean, I saw it is between like 5,000 to 10,000
Yes.
that much.
Yeah.
So thanks, Arun. So fair to say, Usha, that it's not really very beneficial to the white collars. It is definitely very beneficial to the blue collars, to those people who don't have sufficient money in their bank account, or daily wage laborers, or at least low paid laborers. But otherwise, for white collars, it really is not a great benefit. I need more details about it. Sure, Mr. Sonam, we'll do that. Nagaraju will do it to you too. Amal Raj, yes. Can you explain definition of accrued income? This is a question of Swati. So help me here, Swati. Is it the accrued income? Is it related to the 7.5 lakhs that you're talking about? I hope so. Yeah, okay. So income accrued is the term that is widely used. Okay. Now there are practical challenges. We are supposed to calculate perquisite employer and deduct tax on that perquisite, and fulfill our tax withholding obligations with the government before the 30th of April. Okay. But we all know that the Provident Fund organization releases the interest rates for the previous financial year only either in September or October. So we really don't know what it is. So it is the potential. That is what the income accrued means. It is the potential. So what is the potential based on the previous year's PF rate? So the previous year's PF rate is 8.5%. Based on that, we have to calculate now in the month of April. For national pension scheme, there is really no interest that comes up, right? Because it is growth. It's like there is no guaranteed interest with national pension scheme. It is only the growth. So income accrued also means that growth, and the same with superannuation fund also. So that's how this term income accrued has to be interpreted for PF, for NPS, and for superannuation. Swati, happy to take if you have any other questions on that front. Vikram Singh, thank you for sharing your email ID. Lots of benefits are there. Yes, I do agree. Lots of benefits are there, Usha. But my contention is it beneficial for the white collar workers? That's the only thing that I was wondering. Vikram, sorry I have joined late. Can I get the recorded video? Yes, we do have a recorded video. I believe you will send it to everyone. Yes. So my team will send it to you. Vikram, if you haven't given your, okay, I think you've already given your email. So you will receive it. Okay, wonderful. So I still have time to take questions about another 13 minutes. If you guys have questions, happy to take. Is there anybody who is still issuing Form 16s with physical signature? Anybody here who is still issuing Form 16s with physical signature? Okay, good. So that means that none of you are issuing Form 16s with physical signature. I mean, digital signature came way back in 2010 itself, and earlier the Form 16s were supposed to be issued from our software, but now that has also gone off. The Form 16s come directly from the Traces portal. So it is very important for you to make sure that the information that is being shared with the vendor or your partner who's filing your TDS returns for the last quarter, that all the figures are accurate. Otherwise, the Form 16 information will be inaccurate. And because of that, employees then will start receiving notices. If the employees start receiving notices, they come back to you for with complaints that I have received this notice. So just make sure that the information for this TDS returns is filed accurately, because based on that only the Form 16 is automatically generated from Traces. Hey, it's sometimes it's also nice to have an offline conversation, connect on LinkedIn, get to know if we have common friends. There is some not regularly I'm trying to do, but once in a while I do post some thoughts about what I think and how the world looks like for me on LinkedIn. So connect with me on LinkedIn. Will be very glad to also connect with you, and do follow our YouTube channel. Accrued income is okay. Accrued income is money that's been earned but has yet to be received. Example, mutual funds or other pooled assets income over. Yes, correct. So accrued income is that which is earned but yet to be received. But in the definition of the calculation of perquisites, it is interest accrued means, as on 31st of March, whatever is the value, that is the value that we have to take. I know it is very absurd because let's say if NPS has given me a return of 14% today and have not realized that return, next year it could actually go down, including the value of my investments that I've made in financial year 21-22. It could go down, but I have already paid tax on it. Not a great idea. It's very, very complicated. Even the data that we have to get from employees is extraordinarily complicated. It's a real pain in the wrong place for the employers if we have such employees for whom we have 7.5 lakhs and above as employers contribution to these three items. I mean, it's just absurd that we have to do it. But anyway, it is what it is. We really don't have an option with compliance. Okay, that's good. I think we've had a very productive question and answers. Guys, I'm still going to hang out here. I mean, I'm still going to hang in here, not hang out here, for another 9 minutes until 11:30. The poll is still open, and I can see that 56% have have actually given us feedback. I would really love your feedback, guys. So it just takes a couple of seconds. Will be, that's the least that you can do for us. Just give your feedback. How and why you like the session, and what more can we do to be better. Okay. Is there anybody? I mean, anybody from my team, Padmajyoti, Radha, or Arun? Would you like to state something? Anything that I have missed out, or anything of that sort? Any questions from YouTube? Please, check it up, guys. Let's post it out here. Interesting topic. Knowledgeable presenter required for my job. Thank you. Well, then I think we should definitely. Oh, thank you for the session, Dhiman. Thank you for joining. Also, it's not only me but also the participation and these questions that make it valuable. Shilpa, all inputs by you are clearly presented. Thank you, Shilpa. Well, guys, if that is what it is, it was a nice session. Thank you. That is what it is. Let's meet again next month, second Wednesday, same time, same place. Vinayak, thank you, and to all of you, be safe. Take the best. Let's make the best of what we have. Thank you once again. Bye bye.